My name is Brian Penny. I'm the CEO of Wallbridge Mining Company Limited. We're listed on the TSX. We're focused on exploring in Quebec. We have 600 square kilometers of land in northern Quebec, totally focused on gold.
Brian, good to see you. We met, I think we're back in middle of the year, had a chat in Quebec. So I appreciate you coming on and sort of talking to us today. Look, Brian, for those who, I know you're well known in the industry, but for those who don't know you, can you give us a little bit of background on yourself? Where have you been? What have you done?
Yes, my first senior job in the industry was as the first CFO of Kinross from 1993 to 2004. After I left Kinross, I joined forces with a few other mining executives to control a company called Western Goldfields, which owned the Mesquite mine at that point in time. We financed it, put it into commercial production back. It was a shutdown operation. And then about 2 years later, we merged with New Gold, which I became the CFO of New Gold and ran with that for about 10 years. And here I am today thinking I could retire, but this opportunity has come to me.
Miners never retire.
That's right.
You should know that by now. You get dragged out, kicking and screaming. Look, I mean, to be fair, you did sort of come back into a situation which the ship needed righting, shall we say. Can you talk about what the initial brief was when you kind of walked into the organisation, what you saw, what you've done, and I guess over the last 18 months, maybe how you've kind of tidied up the balance sheet somewhat?
Well, what I came into was, Fenelon is a really exciting opportunity. It's in a great part of the Abitibi. The historic mines were in the southern Abitibi, which bedrock was exposed, easy to find. We're in the northern Abitibi. There's glacial overburden that we have to see through to find. And, the previous team did a great job finding Fenelon and taking it to where it was. But the story got a bit confusing because we started off with a large open pit resource. Then we went to an underground bulk mining scenario. And, what we focused on when I came as CEO, I joined as CFO about 6 years ago, and then when Mars retired, I came in as CEO, focused on, what can we do with a company of our size? Ultimately, somebody may buy this company from us, and if it's at a significant premium, we've done our job because we work for our shareholders. But, what should we be looking at as far as how we advance it? So in this last study we did, which was published in March, we focused on a smaller operation that, we have, we can continue to go forward and de-risk it and potentially build it as time goes on. So we did a tonnage grade analysis. We landed on a 3,000 ton a day plant. We simplified everything. We focused on all our deliverables going forward. How are we going to permit it? Well, we came to the conclusion that dry stack tailings are the way to go because that is the right way for the future. A little bit more expensive, but helps with permitting. We looked at what was the right size. We're not going to sink a shaft. We're going to mine it from ramp. We're going to take all of the waste rock, use it for backfill, paste backfill. So at the end of the day, when it comes to closure, there'll be no waste stockpiles on surface or anything like that. So the whole thing was looked on a risk basis, how we go forward, what's the best way to go forward. And, with potential access to cheap green power in Quebec through the James Bay hydroelectric system, yes, we've informed Hydro-Quebec what we're doing, but nothing is approved till we have a bankable feasibility study, which could be 4 years from now, but we keep them informed, and what that could provide for us is even more risk management. If we get access to that power, we'll be able to, it will help with our carbon footprint and will help with project financing as we go forward. So everything was looked at on, from a risk management point of view, how this all fits together, what's the best way. We mine out about half of our current resource in the PEA mine plan, so there's lots of room to expand in the future. I envision this story as, you start off small and you build it bigger. An underground version of Armitage.
Okay.
Yeah.
We're talking about Fenelon here, right?
Yeah, this is Fenelon.
Right, okay. We haven't mentioned the company name yet, so the asset name yet. So just before we kind of dive into Fenelon Martinière, can we just talk about the high level thinking? Okay, when you've also kind of, I noticed you kind of offloaded a few assets this year as well, if you're not non-core assets like Detour East claims, for instance, and you've raised $50 million recently. Has that been sort of out of necessity offloading? How easy, and the other side of that is, how easy was it to kind of raise the money? What were you saying to people you're going to be able to do with the capital?
Well, if you go to our prospectus we filed, the use of proceeds is primarily on Martinière and a little bit on Fenelon, because over the next 12 months, we're going to follow up on the exploration work that was completed this year. So that's sort of what the use of proceeds are. How we got there is, yes, the equity financing was about $15 million. Detour East, Agnico was earning into it through an earn-in agreement. In November of this year, right about today, they would have earned their 50% interest and a joint venture would be formed. They would have to spend $20 more million, but after that, we'd be subject to dilution. Detour Mine, this property is right to the Quebec border, so it borders onto their claims they have in Ontario. The Detour Mine has 20 years of mine life ahead of them, if not even more. And, ultimately we could be diluted down to a 1% NSR, and that could pay 25 years from now. They made an offer for $8 million. It helped with the dilution today. It was the right thing to do so that we could focus on a bigger program this year and avoid, unnecessary dilution by having to do a larger equity financing.
Okay, so that arbitrage is quite a simple decision, really. And if we look at Fenelon, right, which you just described, your PEA stage, you talk about maybe starting small and, better than going out and trying to persuade people they're going to have to raise a ridiculous amount of capex to get this thing built. But why not sort of move that along the kind of economic study phase stage? Why not go to PFS or feasibility study on this thing and kind of maybe park up Martinière for a while?
Well, Martinière, we've looked at this quite closely, and Mark Peterson is my consulting geologist. Mark and I worked together for 10 years at New Gold. He was a VP exploration there, so I brought him over when I needed him about 2 years ago. So great experience, great help. We looked at what is our near-term value creation opportunities and what are our longer-term stuff. Fenelon is longer-term because you need to do a pre-feas and then a feas and then build it, and then you're into the value creation mode. But as far as Martinière, we had some great success this year. We've extended the mineralization from 400 meters depth to 800 meters depth. We've increased the strike to about 2 kilometers. That's about 800 meters wide. So we've identified a bigger structure. We're focusing on 150 meter step outs, not close enough for an updated resource, but we want to figure out how long the structure goes and then go back in. So there's news flow from there. There'll be drilling results and etc. So, that's our near-term catalyst. With Fenelon, we probably need $50 to $60 million to complete a pre-feasibility. Our market cap is about $100 million. It would be impossible to raise that money. So with the smaller financing we did, plus the sale of Detour East, we can start some of the pre-feasibility work. Like one of the things we're going to do this year is we're going to do a second metallurgical test. But what that does, it gives us metallurgical data because, the footprint always changes as you explore and expand things. But the waste product we can use to test our thesis that dry stack tailings is the way to go. It appears that, one of the big problems with dry stack tailings is, clay in the soil and stuff like that. We don't think we have any, but it'll give us a way of testing this up front before we get heavily into the pre-feas. And we'll do other desktop things. We'll review models. We'll look at the geological model for improvements and stuff like that. So sort of that's the plan on Fenelon. And then, all the value creation and the exploration is focused on Martinière.
Okay, so there's some desktop type stuff. Well, not desktop. Some additional metallurgy work or some stope optimization or, I don't know, underground ramp geometry, whatever it is that you could focus on, but you're not going to spend a whole bunch of money on Fenelon. You're going to park that up. You kind of doing those things in the hope that someone comes along and says, well, actually, we'll pick it up from here. Thank you very much. And focus on, I don't know, the exploration upside, which is Martinière. Is that, or do you need to kind of have two assets in the portfolio to be, I guess, stay relevant? I mean, what's the thinking?
Well, the thinking is quite simple. Do I think that Wallbridge, as we know it today, will build Fenelon? If we, advance and increase our market cap, there's, a possibility that could happen. We're in business for our shareholders. You know, if somebody comes in and looks at it and says, how would you like to form a joint venture? We're all ears. Any ways we can advance these projects is in the best interest of our shareholders, we will consider. But for now, you know, the near-term value creation is on Martinière. We need to focus on that, and we need to continue to, you know, de-risk Fenelon. And, you know, by the end of next year, you know, markets change. We get our market cap up. We can do a financing, and maybe we start that. Oh, but if we continue to risk it, maybe somebody says, "Hey, I got a plan. I got an idea for you."
Okay, when you say markets change, because obviously the market's down good for gold at the moment. You know, $4,000 gold is really nice. There's been a lot of M&A activity. To be fair, you know, mergers of equals, producers buying producers. Not a lot coming down, you know, cascading down into developers. Some, but not a lot. For a company like yours, what you're saying is like, we're going to have to wait on Fenelon until it does kind of come cascading down. But real value can be and is still being generated through the drill bit in the market. Are you seeing that, or are you hoping that?
Is it here today? You know, we put out some great results on Monday of last week, and, you know, we didn't get much reaction to it. It will come. We have to continue with steady hands on a steady path forward.
It's that sort of experience talking of cycles. Like, it's easy to kind of criticize in a sort of in a down cycle or where the market's not paying attention. But, you know, you did put out some, you know, decent results last week, and the market was just kind of like, well, you and other people just going, well, great, but it's not production, it's not cash flow, and that do you think that's what's being rewarded at the moment?
Right now, you're seeing, you know, the rewards in the business for access to immediate cash flow. So, you know, larger producers that are selling gold for plus $4,000 an ounce, they're tripping over their free cash flow. It's fabulous. You know, when I was the CFO of Kinross, I remember when gold hit $250 an ounce. It's a little different environment. But, you know, and when gold, after 9/11, when gold hit $800 an ounce, it took a little while for the money to flow to the juniors. Yes, we're at $4,000 an ounce. We're at, you know, spot price of gold is up 40% this year. Money will come into the juniors. You know, it's not quite there yet. Some stories are getting access to it, but the guys that are closer to, you know, they're in construction or something like that. Two things to weigh. How do we get closer to construction? How do we create some exploration opportunities in this company? And that's what we're focused on. Is what can we do that doesn't cost a lot of money to de-risk the project to hopefully attract investors in the future.
Okay, fair enough. And I'm a buyer. Yeah, I understand that, but it's kind of just spelling out to people. Like, sometimes you kind of got to go through the cycles, and, you know, contrarian thinking, you know, means something. Can we then sort of maybe dive into Martinière a little bit more? When it comes to this kind of the Dragonfly Shear corridor geometry, what you're drilling, we're talking about last week, what your drilling is showing is that on multiple intercepts on phase 2, there's this kind of vertical continuity and multiple shear structures in place. You know, 50 grams over, you know, 1.7 meters. You've got 9.5 grams over 2.6 meters. So is your team starting to refine and build out a kind of 3D structural model at the moment? And, you know, and what are you thinking? Mineralized lenses versus stacked parallel shears. I mean, what are we looking at?
Well, unfortunately, I'm not a geo. I'm a CPU.
Okay.
Okay.
Okay. Are they excited?
They are greatly excited. What we've identified is
Right.
what's known as the Bug Lake Corridor. It basically, there was mineralization to the north, an underground resource, and to the south as well. We've drilled the area in between. We've extended it to 2 kilometers. We're down to 800 meters in depth, 800 wide. Every 150 meters, we're hitting structure and good results. So it appears that there's something special there. We haven't closed it off, and that's part of the plan next year, is to see how far this goes, and then figure out the infill program from that and the timeline to get it to a resource, which is probably sometime in 2027.
2027. Okay. So have they
Yeah.
sort of seen?
But it's getting really exciting. You know, it's you know, highly successful.
Okay. So are they sort of looking at Okay, I'll stay away from technical. It's fine. Okay, we can talk. Maybe someone else can join you next time you're on, and we can talk about step out and
Yep.
diminishing returns on density, etc. Blah blah blah. And what exactly are we looking at here? Is this you kind of got high grade intercepts, but you've also got kind of got bulk tonnage ability here as well. Have you got a sense of what type of asset, what type of project this will become based on the current modeling asset drilling to date?
It's still early for that. We've identified some really exciting targets. There's only 750,000 ounces in the last resource estimate. We believe through our studying, we need about $2 million in 2 million ounces, and this gets really exciting. So, the plan is to see how far this goes. If there's the potential to deliver 2 million ounces and get into the infill drilling, which I believe is exactly what will happen sometime later in 2026.
Okay. I did read that you had said that there's kind of lateral continuity between sort of Dragonfly and Bug Lake South and Horsefly, etc. So you obviously the continuity here is a big, which I guess drives you to suspect that there'll be a lot more ounces to be found. But how do you kind of, again, I know it's not a technical question, but it is a question of strategy in terms of where will you throw your dollars at? Because you can't go chasing all of it.
No, but we need to figure out the extent of this, first of all. Right now we believe it extends 2 kilometers. Does it go much further? And yes, it sort of, fills in the open hole in the Bug Lake corridor. So it's getting really exciting. We're finding structure, we're finding grade, we're finding mineralization. We're hitting everything that the geos were looking for. And, stay tuned from that. We'll figure out next steps as we go through next year.
Okay. Well, like I say, we can maybe.
In the next meeting, I'd love to get Mark Peterson on. Because that could be very, very helpful.
Let's do that. In terms of so you're kind of you're going to have money for the next 12 months to kind of get out to do what you need to do, both on Fenelon in terms of the desktop and the drilling.
We're probably financed to first quarter of 2027. So yes.
Yeah. Okay. Fine. Do you think you've been able to do everything that you wanted to do, or have you been sort of forced into some actions by the market? When compared to day one when you're looking at this, day one as CEO, looking at this thing versus today, some sort of 12, 15 months later.
Well, it's been interesting because if you look at what happened was I became the CEO just about 2 years ago today. I was faced with a very challenging environment for the 2024 program. We worked our guts out to do a $7 million flow-through financing. At the time, we were faced with, how do we go forward with the company? Some of our shareholders were saying, stop everything, shut it down, wait for better markets and do nothing. Well, we've got a camp environment. We're in the far north. It's hard to get people up there. If we shut it down, we lose everybody, and then we'd have to retool, and it'd be very challenging. The other option we looked at, do we continue going, and the amount of money we'd have to raise would be too dilutive for our shareholders, so we couldn't do it. So we put together a small program for 2025 with the money we could raise, and it was a one drill program, and it was primarily focused on some follow-up work at Fenelon and work at Martinière. So we kept moving forward. 2025, we had a smaller program as well. Markets were still tough. And then, things seem to be improved this year. And we'll probably do a little bit bigger of a program. With the sale of Detour East, we got a little bit more money than we had. At the end of October, we had about $31 million in the bank. So a little bit more finance for a little bit bigger program, focusing on the 2 projects. And, near-term catalyst is drill results at Martinière.
So how do you describe yourself in terms of that and your decision making?
I believe in getting the entire team involved. We have a young team, and that's where Mark is a big asset. We have a young geological team at the site. Mark's got as many years in the business as I have, and he's a great mentor for the team. I find myself as a mentor for the team. I do not believe in pigeonholing people. I get everybody involved in the decision-making process, so everybody has a vested interest, and that's the best way to run a company.
And have you had to change the team, or do you think you'll need to bring more people on to kind of deliver your
Well,
plan?
ultimately, we will need to add people to the team, because assuming everything goes according to plan, and we're going to advance Fenelon to a pre-feasibility, we're going to need some technical support in the organization. Right now, we contract out engineering services, stuff like that. But eventually, you're going to have somebody leading the charge within the company.
Right. It kind of feels like there's a pragmatism to what's going on, but at the same time, the fact you've raised $15 million tells me that you've got either a group of shareholders or new shareholders that believe that you're capable of executing on what you're talking about, and they value that.
Mm-hmm.
But you think that's true?
Yes, that is absolutely true.
Interesting. Okay. Well, look, I tell you what. Why don't we kind of reconvene with one of the technical chaps and sort of see if we can get in and understand the value which you're going to unlock at Martinière, because I think that to me, obviously, is the blue sky.
Absolutely. Yeah, and Mark can add a lot of color to what our discussion so far.
No, I appreciate that, Brian, and I appreciate the candor as well.
Not everybody,
what you got there.
In a perfect world, your CEO should know a little bit about everything. And, I have an expert, head of geology on this team for that reason.
Yeah, makes sense. Brian, appreciate your time today. Look, we'll see you real soon, okay?
Thank you very much, Matthew. Bye for now.